Hello, and welcome back, guys. So Meta has been treating us like kings, and as you'll see here, I have the max chart going. You will see Meta's price through the years and the massive increase in the price increase that the company has enjoyed in the past like year or so. Frankly, if you take it from here, for instance, where the stock was $89 back in November 3rd, so it was like seven months ago, and the company skyrocketed from there, from $90 to $300 almost. Right now, as I'm making this video today, July 5th, the company is approaching $300, $3 short of 300 actually. And I myself bought it back when the Cambridge Analytica scandal was a thing. That was, I think, back in 2020 or so. And since then, the company has been going higher and then lower. And right now, I have basically almost doubled the money that I put in this one, which was about 20,000. And I am contemplating on potentially selling more. Like I've sold about $5,000 worth of shares, but I was potentially thinking of selling a little bit more. Now, I did want to make a video talk about a few things in regards to Meta. Like Meta today is actually up 3.2% right now, as of the making of this video, but the overall stock market is actually down. As you'll see here in our dashboard page, the overall stock market is down. And of course, taking a look at our tool here, which every patron has access to. If you're interested, you can find a link in the description box below this video, and you can become a member, gain full access to what you're seeing here. So, as you will see, the company's stock is actually up, and it differs from what is going on in the overall market. So why is that? If you take a look at our stock news module, you will see that Meta stock soars to 18-month high ahead of Instagram Threads launch. So what is that? And I have opened this up here, and you will see that Meta stock soars as the behemoth, the social media behemoth, reached an 18-month high, approaching almost again $300. Since Facebook, an Instagram parent company, prepares to launch Instagram Threads, a long-awaited answer to rival Twitter, as competition heats up between billionaires Elon Musk and Mark Zuckerberg, which were actually it's probably a thing that they are going to have a fight of some sort. It has been discussed recently. I don't know if this is going to happen, but there has been some discussion around that. Now, take it back here. You will see that we had a little bit of a fall ahead of the release of Fed's pretty much announcements. But again, the stock picked up, and right now, as I'm making this video, let me go back and see where we are at, 3.15. So yeah, $297 as I'm making this one. Now I wanted to make this video and also ask your opinions, guys, about Meta. If you're holding, are you actually thinking of selling right now? I will probably set up a poll as well. I'm really interested in hearing your opinions about this one. Is it time to sell, potentially? Because yeah, if you have been holding for a while, you have definitely made a killing here. And especially if you bought in the lows, as we were definitely suggesting here. And I think Baba could actually become the next thing that is going to be having a similar run. Of course, I don't know that, and I can definitely not say that for sure. That's for certain. But I do think that we're having a lot of similarities here in regards to Baba, which is a similar behemoth, pretty much really underpriced right now. Now the thing is, I want to take a look at Meta, and I want us to examine it together a little bit so that we see whether it makes any sense to be paying right now, to be selling right now. And it's all about the actual cost of the stock in comparison to what the company's financials are. Yet there is also something else that I wanted to talk about. If you take a look at the max chart again, which you can see here in our tool, you will see that, yeah, we have had a massive run, and people may be thinking, okay, at some point this will actually die down, we will have some sort of a decline, and yeah, at some point it will probably happen. But you may be surprised at how long a company can actually keep having a trend for, and could keep going upwards for a while. That can happen a lot of times, and you can be super surprised about a trend, or an uptrend in this case. We definitely have an uptrend, which doesn't seem to have died down yet. Now at some point, of course, it will sort of like level itself. Typically, as a trader at least, you kind of like to wait for a little bit of a basing pattern here, sort of something like this, like something where things get a little bit sort of sideways movement, and this is where most people tend to sell, when there's a little bit of a sideways movement. Now, the nice thing about it, again, from a trader's perspective, all these things that I'm talking about, there is not too many back holders here. Like if you take a look at the back holding period, it's just a few months in these levels, like 330, 330, 27, 340. There's just a little bit here, 382 for sure. But overall, we're not that far from sort of like the back holders area where people actually bought and have some fear of potentially making their money back, which could cause some resistance in these levels. But typically, when you surpass these levels, you could actually easily see this company's stock continuing upwards, regardless of the financials and the ratios and everything. Of course, however, as long-term investors, we are not traders, so we're not really trading this one. We're actually looking to make solid investments. And this is what we're going to be examining next. Now, the P ratio of the company obviously moves with the stock price and the financials that the company has been achieving. At some point, this was basically free, almost. And again, I was making tons of videos talking about this one. We're less than 15 as a P ratio. This couldn't happen for a while, like couldn't stay for too long. And of course, it skyrocketed. And right now, we're sitting at 36, which becomes a little bit more expensive, if not substantially so, again, compared to where it was. Because, depending on the stock, depending on the actual company that is behind the stock, you could be buying value at a little bit of a more expensive price, but you don't want to overdo it. And typically, myself, I kind of like to wait for better prices. Now, yes, buying a good company at a little bit of a more expensive price is fine, but if it's too expensive, I kind of want to wait because you definitely get discounts all the time in the stock market, all the time. Things happen, the stocks go down 15, 20%, and this is when I like to buy. I don't really want to buy when the stock is actually really skyrocketing. This is where I'm actually looking to sell, but looking to sell sort of when more than likely the stock will actually sort of like pause a little bit. I did sell 5,000, but I still have quite a lot of stock here. So what is going on with the actual financials though? Again, the price to free cash flow, again 40 here, skyrocketing, likewise skyrocketing. And we have talked about the company buying back shares. Basically, the financials of the company are awesome here, and yeah, they had their issues, they had their problems, and this is why the stock went down. Of course, the sentiment is a big thing, and this is when I guess intelligent people would be buying. When everybody hates the stock, when everybody hates the company, this is where investors who are actually looking at data flock in around the company and actually buy the stock. And you will see that we are sitting at 117 billion, for instance, here in terms of revenue, and it keeps climbing from 55 here again to 117. And the net income going back to pretty much better values, approaching, I should say, a little bit more than 2018. But remember, the fiscal year 2021 was 40, and then they had a massive decline. And again, things that we know about, and we do know about the companies spending a ton in the metaverse. So these are some numbers that are definitely expected, and the same thing with the cash flow statement as well. You will see that their cash flow has been impacted again from almost 40 to 20 because they were spending tons of billions in the metaverse. And now, as the company is actually moving away from this one, it seems like it has been a fail. More people buy the company and they are taking it to a sort of like more normal valuation over here. If not an overpriced one right now, it could be actually a little bit overpriced. I'm going to use our stock evaluator tool and see where we are at. And the revenue growth that I'm going to use, again, you will see that the average is 24%, but again, we had some years where things were more negative here, actually 1 year. I will go much more conservative, and I will try a few values like 5, let's go 8 and 11 here. And the net income margins, the company typically makes high margins. Typically, again, you will see that it's like 30% almost. You can kind of see it here in our table. So I will go with the thing that makes the most sense. Now, we do expect some probably declining margins for a little while again at this current economy. But overall, in the next 5 years, I do think that it's going to go to its normalcy, to be closer to its normal net margins. So I will go something like 25, 27, and 29, still being a little bit lower than what is the normal for the company. And the free cash flow margin I'm going to use is going to be 80, 90, and 100, very typical, and this is what the company seems to be doing. An annual return of 13%, the typical one that we like to use. We hit calculate here, and you see where we're at, right? So right now, with a current price at $300 almost dollars, it's not like extremely expensive, but it is expensive. And the revenue growth of 11%, net income margin of 29, and free cash flow margin of 100, which is not like super aggressive, but it's not conservative either. We are sitting at $280 almost, 277, and the current price is approaching 300. So we're entering a space where the stock price is actually a little bit elevated, and it could come down to its senses if the company actually makes more net income and keeps increasing its revenue in the upcoming years at a healthier pace, at an even higher pace than 11%. Then it could make even more sense to be buying at this current price. But it gets a little bit sketchier here, and it's not a bargain, is the thing. And this is why I think it's probably time to be looking for an exit instead of an entry here. But do tell me what you think, guys. Leave a comment below. I'd love to hear your opinions, and I'll see you in the next video. Bye bye.